स्वाध्याय टीवी. डॉक्टर बाबासाहेब आंबेडकर ओपन यूनिवर्सिटी.
Hello, Namaskar. Welcome again in the series of the question of unit costing. We were already discussed the two issues and two problems regarding the unit costing. In that questions we were prepared earlier what is unit costing and how to prepare the statement of cost sheet for the manufacturing of unit. In the second part of the question we were actually find out the tender cost sheet also and how to prepare the tender cost sheet on the basis of a tender cost sheet. So this is something which we were actually try to find out when the people are actually try to manufacturing a number of units and how the number of units production cost has been changed on the basis of the past data or on the basis of a structure which was already designed earlier. In the continuous of this question, in this series of lecture, we are trying to find out the tender cost sheet directly without any part of a cost sheet we prepared. So we have already certain informations on our hand, and on the basis of that informations, we will try to find out and modified the tender cost sheet for the year for the next year. So for that, we'll just try to understand the question first. So the first part of this, that try to understand the question. Second part, we'll do it the working and find out the missing items which were actually not clearly given in the question. And the third part, we will try to prepare the tender cost sheet and identify the what amount of cost has been incurred for the manufacturing of a unit as compared the past data for the preceding year. So now let's move the try to understand the question part. The first part of this question is, if the question is actually given in the different format. Here the question is given in the trading and profit and loss account manner. So the trading and profit and loss account is actually identified the information which was actually required for the preparation of a cost sheet. Here the tender cost sheet is actually asked the requirement of a trading and profit and loss account informations which were actually mentioned the first and second part. Let's see the how actually determine the things is the tender cost sheet in the part of the first concern. So here the trading and profit and loss account which we have, the earlier it's part of the trading account which required the information of a raw material purchased, carriage inward, productive wages, railway freight, production expenses, on the other side sales and closing stock. So now this is the first part of the questions which are actually required the information regarding the trading expense. So the first prime cost and up to a factory expenses, all the informations are given in the first part of the question. In the second part of the questions in the profit and loss account, which we have information regarding the office expenses as well as the selling and distribution expenses. So the selling and distribution expenses and office expenses are recorded in the profit and loss account, and which are the expenses has been recorded in the year 2013. So here we have information for the year 2013 of the particular company regarding the trading and profit and loss account and what they were manufactured, how much amount of raw material consumed, what amount of factory expenses has been incurred on that, after that what amount of gross profit incurred from out of it, and then how much amount of office and selling and distribution expenses incurred on the particular manufacturing of a product. At last what amount of profitability they earned, that was 74,030 rupees. They have a certain incomes also like interest, discount received and the other sundry receipts. If you are going to see on the profit and loss account credit side, they have a certain incomes also, but the incomes is never considered when you are preparing a cost sheet. So income parts are never considered in this preparation of the cost sheet. We will just try to identify the expenditures, and expenditures to be identified in the structure of a cost sheet, and we will identify the changes of expenditures of a cost structures for the upcoming year, for the next year, and whatever the changes are incurred according to the changes of the expenses would be recorded in the new cost sheet for the upcoming years. Now moving to the next second part of the question where some adjustments we have, and in the second part of this question is the estimates for the year 2014 we have certain. we have a 7 adjustments. If you are going to see this, all the 7 adjustments are actually applied on the trading and profit and loss account of the last year, and on the basis of these changes we would be identified the all missing items for the preparation of the cost sheet for the year 2014. See, if you are going to identify this, output and sales will rise. So that means as compared to the last year in the 2014, output means number of units is going to change. It will be definitely impact on your sales also. So sales is also going to change. Then the price of materials will rise by certain amount. So the raw material cost is also going to change. Then carriage inward and freight is also going to change according to the proportion of output. It would be affected what amount of productive wages, direct wages. So direct wages is also going to change because of they are actually recruited the new people in the factory premises, and their salary would be actually incurred more, and on the basis of that the productive wages would be changed. Then half of the production expenses is variable, the remaining half would be a fixed cost. So here the production expenses, in the last year it was given the total amount of production expenses in trading account, but in this year the production expenses would be divided, a certain amount of expenses incurred in a fixed basis and the other is on a variable basis. Then they have some amount of changes in office rent because of they are going to purchase the house. So if they are going to purchase the house, automatically office rent will be removed in the next year onwards, and they will be paid the some amount of taxes, municipal tax also. So it would be considered under the office expenses. Office salary is also going to increase by some percentage, and at last the adjustment is distribution cost includes some picking charges, and it is also changed with a certain amount. So this is what the second part of this question. Here in all we have these questions in two parts. The first is the trading and profit and loss account of the last year, and what would be the changes in the next year. On the basis of the certain adjustments we will try to find out the changes in the 2014. So first that for the solution of this question, we find out the missing items first, and the missing items will be find out, that is our first part of your solution. Then the second part is, after the missing items we identified, it will be put into the prescribed format of cost sheet. Now let's begin with the solution of this question. So now on this basis of this question we will try to find out the solutions. The solutions we will actually identify in the two format. The first is whatever the missing items we have for the calculation of the year 2014 on the basis of 2013. So we have a certain changes, maybe the changes we have in a number of outputs, changes we have maybe in the sales amount, changes we have in the total cost of material and productive wages. According to that, maybe we have a certain changes in a factory overheads, office overheads and selling and distribution overheads. So we will find out first all missing items one by one, and on the basis of that we will find out the second part of the solution, that is the cost sheet of the 2014. Let's move this first part. This is a certain we have estimates for the year 2014 are as under. So we have the first is output and sales will rise by 40%. So it means output and sales will affected by 40%. So we have the first thing, that is number of units in 2014. This would be calculated on the basis of a commission on sales. Now see, we have a commission on sales here, that is we can find out through here. Now see here, we have a commission on sales, that is 15,000, that means we have a 15,000 rupees, and this 15,000 rupees actually commission on sales will be find out per unit rupees 6. So now commission on sales is rupees find out 15,000 on the basis of 6 rupees. We can identify the what amount of number of units were manufactured in the year 2003. So 15,000 rupees divided by 6, it would be calculated that the 2500 units. So 2500 units were manufactured in the year 2013. So this was the number of units manufactured in the 2013. We need to change how much percent it will increase in the year 2014. So the production estimated for the year 2014, it will rise by 40%. We have an adjustment that the how much proportion has been increased in the year 2014. So 2500 units were manufactured in the year 2013, increased by 40%, it comes to 1000 units. So in that way, the total number of units manufactured in the year 2014, that is 3500 units. So 3500 units, it's a manufacturing number of units for the year of 2014, or you can say it's an estimated cost sheet. Now we'll again move for the question part, that is 2014. See here, the second part, the price of materials will rise by 12.5%. So here the price of materials is increased by 12.5%, and it would be impact and changes would be occurred on carriage inward and railway freight will rise in a proportion of output. Now for that we will need to identify the how much amount of material price has been increased. See here, the material price has been increased, that is, see here, the material cost for the year 2013 on the basis of 2500 units, it was 64,000. How it would be find out 64,000? See here the question, that 64,000 rupees because of the raw material purchase was 68,000 rupees and the closing stock of raw material was 4,000. So in that sense, 68,000 minus 4,000 of closing stock of raw material, the net amount of raw material purchase in the year 2013 was 64,000. Net amount of raw material consumed in the year 2014, that is 64,000. And now this 64,000 rupees will be reflected on the proportion of year 2014 because of 64,000 rupees raw material consumed for the 2500 units. Now it would be changed for how many number of proportion unit increase in the year 2014, that is 1000. So 3500 units, this cost would be 89,600 rupees. So on the basis of the proportion changes 3500 and 2500, the amount of material cost has been increased 89,600 rupees. This is the first part. We will actually try to identify the how much proportion of material cost has been changed. Now the adjustment is the 12.5% material price will be increased. So 89,600 is actually a material cost if you are manufactured 3500 units, and then the 12.5% increase on this, it would be around 11,200 rupees. So 89,600 plus 11,200, the total material cost would be 1,800,000 rupees for the year 2014. So now the total amount of material cost would be 1,800,000 rupees on the basis of the changes. There are two changes. The one is the proportion number of units. The first is 2500 to 3500. On the basis of this calculation, it comes to 89,600. And the second change is the 12.5% increase in the material cost would be 11,200. On this basis, it would be around 1,800,000 rupees. Now moving to the next part, that is the third adjustments. Third adjustment is because of increase in output, 5 new workers will be recruited and each will be paid a salary of rupees 150 per month. So now if you are going to identify the productive wages we have in the particular year, that we have a productive wages rupees 36,000. So 36,000 rupees productive wages in the year 2013. And we don't have any changes so far, the productive wages on the basis of a certain proportion. So now let's see how the productive wages would be calculated for the year 2014. Productive wages as such, no proportionate increase in the number of workers, but only 5 new workers are recruited and their salary per month is 150 rupees. So 150 rupees it's per month salary for 5 workers for 12 months. It comes to rupees 9,000. That means the productive wages would be changed in the year 2014 by 9,000 rupees. 36,000 was incurred in the year 2013 and the 9,000 rupees productive wages has been increased more due to the number new 5 workers has been recruited in the year 2014. So the productive wages would be 36,000 plus 9,000 rupees in the year 2014. Moving to the next adjustment, and that is, yes, half the production expenses is variable and fixed cost will rise by 25%. Now see the question. Production expenses we have 14,000 rupees in the year 2013. So this 14,000 rupees production expenses would be divided into 2 parts. The adjustment it shows very clearly, half the production expenses is variable. Half the production expenses is variable, it means that, now see here, the production expenses, half of the expenses is variable, so the remaining half of the amount is fixed. In that sense, the variable expenses will rise by the production according to the proportion of the production. There is 7,000 expenses because of the total amount of production expenses it comes to 14,000 rupees. So 14,000, half of the expenses is variable, that is 7,000 rupees. Remaining half amount of the expenses is comes to 7,000 rupees, it comes to fixed expenses. Now variable expenses is always change on the basis of proportion. In year 2013, they were manufactured 2500 units, but in year 2014, we are manufacturing 3500 units. So, according to this 3500 units, we need to identify what amount would be changed on the particular variable expenses. So, first we calculated variable expenses change on the basis of 3500 units. It comes to rupees 9800. So, 9800 rupees is a variable expenses for the year 2014 on the basis of a certain changes of the production number of units. Now see here, fixed expenses is actually 7000 because of we already divided the total amount of production expenses in two parts. The 7000 was a fixed expenses and the remaining 7000 is variable expenses. Variable expenses is always change on the basis of changes of number of units. So that we already find out, that is 9800. But the fixed expenses is increased by certain percentage and that is 25%. So now 25% will applied on this remaining 7000, which would be changed 1750 rupees, which comes to 8750 rupees. So now this is a fixed expenses change. On the basis of the certain changes, the total amount of production expenses are going to change. The 9800 it is variable and 8750 rupees that is a fixed expenses. Moving to the next part, the company has purchased the rented house from 1/1/2014, that means from the current year, in respect of which the municipality has assessed rates and taxes of rupees 6000. Now see the question it shows very clearly office rent rupees 15,000. So now office rent it was paid in the year 2013, it's 15,000 rupees, but in year 2014 onwards the company purchase a house. If they purchase a house, they need not require to pay any rent. So in year 2014 onwards, the rent amount will not be comes into the picture. So rent will not be recorded here because of they have their own property. If they have their own property, then they may be having a certain other expenditures like a municipality taxes or maybe house tax and property tax. So here, according to this adjustment, they have a 6000 rupees rates and taxes, municipality taxes from the year 2014 onwards instead of a rate instead of the rent which they paid in the year 2013. Now just find out this. According to this, the office expenses or office rent, we would be considered the municipal tax and rates from the 2014 onwards rupees 6000 instead of the rent which they paid in the year 2013. This is what an explanation of the adjustment number 5. Next adjustment is office salaries will rise by 8%. It is very simple calculated. We will directly calculate it when we prepare the estimated cost sheet. Directly 8% increase of office salaries in the previous office expenses or office salaries which was actually calculated in the year 2013 cost sheet. The next adjustment is distribution cost includes packing charges at the rate of rupee 1 per unit. Distribution cost. Now see here, the distribution cost which they were actually calculated here, the distribution cost was actually 6000 rupees. So at that point of time, whatever the distribution cost was incurred, and now we'll just find out what would be the change in the year 2014 and how they were actually calculated the distribution cost. So here, the distribution cost, it includes rupees 1 packing charges per unit which will increase by rupees 1000. Why it is increased by 1000 rupees? Because of in the year 2013 they were manufactured 2500 units. But now in 2014 onwards we will manufacture 3500 units. So it increased by 1000 units and they were clearly mentioned that the distribution cost and packing charges will increase rupee 1 per unit. So how many units are going to increase in the year 2014? That is 1000. So 1000 unit and 1 rupee per unit, it comes to 1000. Last year the total distribution expenditures was 6000, but because of the increase of rupees 1000, the total distribution cost it comes to 7000 rupees. Now moving to the next adjustment, that is railway freight and carriage inward. These expenses are going to change proportionately. How it would be proportionately actually change? The railway freight was actually paid last year. In the year 2013, it was 3000 rupees. But this 3000 rupees was paid because of 2500 units. Now here in the year 2014 onwards, they were manufacturing 3500 units. So if they manufacture 3500 units, then we will find out the proportionate changes on the basis of 3500 units and it comes to 4200 rupees. So now 2414 onwards, railway expenditures were considered 4200 rupees. The same thing will be applied for the carriage also. It was actually calculated in the year 2013 rupees 3000, but that 3000 rupees were actually calculated on the basis of 2500 units. Again 3500 units will manufactured or estimated for the year 2014. So according to the proportion of this, it would be around 4200 rupees. So railway expenses and carriage expenses for 2014 would be around 4200 rupees. The next calculation is commission on sales. Now commission on sales would be calculated very simply. You can see and identified, it was actually calculated in the year 2013 rupees 6 per unit. This is clearly mentioned in the question itself only. See the question. Question, it shows that the 6 rupees per unit commission on sales here, the commission on sales into bracket per unit rupees 6, and it comes to 15,000 rupees. We will find out also the how many units were manufactured in the year 2013 on the basis of this only. It comes to 2500 units. Now this time the 6 rupees per unit, but your number of units manufactured in the year 2014 it's going to change. It comes to 3500 units. So the commission on sales is also going to change, and this would be calculated 6 rupees but multiplied by 3500 units. So 3500 units multiplied by 6 rupees, which comes to 21,000 rupees. So now this is the way for the calculation of commission on sales for the year 2014. The total amount of commission on sales would be 21,000 rupees for the year 2014. This is the way to calculate it, the part of commission on sales. And the last adjustment, the profit would be calculated 25% on sales price. Listen, last example also I would try to explain that if this profitability has been calculated on a sales price, then we don't have a sales without the profit has been charged. How it would be calculated? If it would be charged on sales price, we need to calculate it on the basis of a cost price. Because of cost price we have, that we can estimate it also, and that we were calculated also. So on the basis of sales price profitability has been given, then we would be try to find out the how much amount of profit would be charged on cost price. So here if it is given 25% on sales price, it would be calculated 33.33% or a 1/3 part of a cost price, and that we will calculate it at the time when we find out the profitability. So it is the last part of the estimated cost sheet that we would be calculated at last. Now this is the way to find out the total working required, or we will find out the missing items regarding the part of the question. So here the prepare a statement showing a selling price per unit for 2014 if the sales are to be made so as to make a profit of 25% on selling price. So on the basis of this only we try to find out the what would be the profitability has been charged in the year 2014 on cost price instead of the selling price, because of the selling price would be calculated after the profit has been added into cost price. We have a cost price but we don't have a sales price. So that is why we try to find out the proportionate changes. If the profitability has been given on sales price, how much would be charged on cost price, and that is 33.33%. This is your first part of the solution, where we try to find out the missing items for the calculation of estimated cost sheet, and now we will try to find out the estimated cost sheet. Now see here the second part of the answer, and that is your cost sheet. This is the cost sheet, estimated cost sheet for the year 2014. Now for the estimated cost sheet of 2014, first is raw material consumed. Raw material consumed we find out 89,600, and this 89,600 we find out on the basis of the certain things, and the certain things which we were actually try to find out on the basis of their calculation. See the calculation. The calculation shows that 89,600 here. This is 89,600, and how 89,600 has been determined, that we already identified. Now see here, this material cost would be recorded the first item here in the cost sheet, 89,600 rupees, then added plus 12.5% increase, that is 11,200 as per the adjustment. So total material cost for the year 2014, that is 1,08,000 rupees. Then change the carriage inward and railway freight, that we were already calculated, and according to the proportion change of the 3,500 units, because of now they were manufacturing 3,500 units. Earlier they were manufacturing 2,500 units. So on the basis of that 3,500 units, we were actually find out the what would be the change, that is 4,200 rupees each. carriage inward would be 4200 rupees and railway freight is also 4200 rupees. Both would be recorded here in this inner column. This is the part of prime cost and this is the part of the raw material consumed. So it would be added into the raw material consumed, 4200 rupees each. Outer column it's 8400 rupees. This is your raw material purchase expenses. Then the next is production wages. Production wages 36,000 rupees. This was the calculation for year 2013. In year 2013 was 36,000 rupees. But then they were actually recruited new people or new employees in the year 2014. They were recruited 5 workers and paid 150 rupees salary per month multiplied by 12 months. So it comes to 9,000 rupees. So 9,000 rupees increase in a productive wages and added into this the amount of productive wages for the year 2014, which comes to 45,000 rupees. Now total of these 3 items, this is 1,54,200 rupees and that is your prime cost. That is your first answer. Your first answer for the estimated cost sheet 2014 it comes to 1,54,200 rupees. How it comes 44.06? This 1,54,200 divided by 3,500 units. 3,500 units is an estimated cost sheet for the year 2014 and they ask in the question to find out the per unit cost also. So 1,54,200 divided by 3,500 units, per unit cost is 44.06. Now second part. Second part is production overheads, that is factory expenses. They have the production overheads were already divided into 2 parts as we already discussed in the first part of the solution. We were trying to divide the production expenses in 2 parts, fixed and variable. So here see here this variable expenses and fixed expenses, it was divided in 2 parts. In the year 2013 there were total expenses of production, that is 14,000, and it was divided 50-50, 7,000 rupees for variable and 7,000 rupees for fixed. 7,000 was variable and that was actually incurred for 2,500 units. In the year 2014, the changes of 3,500 units, we find out the how much proportionate change in a variable expenses. So the proportionate change which comes to 9,800 rupees. So in year 2014, production expenses variable proportionately change and it comes to 9,800. But fixed expenses were increased by certain percentage, and that is increased by 1,750, which comes to 8,750 rupees. The total amount of production expenses included fixed and variable, it's 18,550. Added into a above prime cost, the total cost would be 1,72,750 rupees, and that is your second answer, factory cost. This is your factory cost. Again it is divided by 3,500 units to identify what would be the cost per unit, and that is 49.36. So this is your second answer. Moving to the third part, and that is administrative overheads. Administrative overhead means office expenses. Whichever the expenses are incurred to maintain office and day-to-day transaction like communication, office, salaries and other things would be recorded under this part. Now we need to identify from the 2013 cost sheet which are the expenses recorded under the admin expenses. There are 3 expenses which we identified. One is office salaries, second is office rent, and the third is other administrative expenses. As we already discussed, and according to the adjustments which was given in the question, that the company is going to purchase a new house for office from the 1/1/2014. So it means that we were already discussed at that point of time. Now they don't have to pay office rent from the year 2014. So from the estimated cost sheet in the year 2014, office rent will remove from this. Office rent will not come because of they already have their own property. But instead of the office rent, they might be having some other expenditures, like they maybe have a property tax, they maybe have a rates and taxes of municipality and certain other things. According to the question, they were clearly mentioned they have a municipal rates and taxes of rupees 6,000. So the 6,000 rupees, it's a municipal rates and taxes, it comes into the picture, that's one. The second is other administrative expenses, 9,000 rupees, and the third is office salaries. It was incurred in the year 2013, that is 16,000 rupees, but because of the certain percentage of office salaries increased by 1,280 rupees, it comes to 17,280 rupees for the year 2014. So that means there are 3 expenses. One, of his salaries because of the changes in the year 2014, 17,280 of municipal rates and taxes because of they have their now own property, that is 6,000, and the third, that is as it is, other administrative expense of his 9,000. Make it the total of all these three items. Outer column, that is 32,280 rupees of total office expenses added into a factory cost. The factory cost is 1,72,750, added this 32,000 on that, and the total amount of the next answer, that is the cost of production, 2,05,030 rupees. So this is your cost of production. Again, it is divided by 3,500 units because of as we are manufacturing 3,500 units in the 2014, divided by this, your per unit cost comes to 58.58. So this is your cost per unit and this is your cost of production. Now coming to the last part of this question, and that is selling and distribution cost. According to the question 2013, we need to identify which are the expenses will be recorded under the heading of selling and distribution expenses. And we identified there are 4 expenses were mentioned in the year 2013 P&L account. There are 4 is one is advertising, second is distribution expenses, third is other selling expenses, and fourth is commission on sales. So first is advertising. According to the 2013 advertising expenses were incurred rupees 3,000. And in year 2014, they don't have any change for advertising expenses so far. So we would be considered as it is 3,000 rupees in the year 2014 also. That remains same advertised expense in the year 2014 also. Then the next is distribution expenses. Distribution expenses we were already calculated in the first part of the solution of this question. 6,000 distribution expenses were given in the year 2013. But because of the 1 rupee increase for a packing expenses per unit, in the year 2014 onwards, it increased by 1,000 rupees because of 1,000 units increase in the year 2014, and that is why it comes to 7,000 rupees. 6,000 plus 1,000, 7,000 rupees. The next is other selling expenses, that is 5,470, which also remains same and unchanged. And the last is commission on sales, because of the commission on sales is calculated on the basis of number of units. In year 2013, they were manufactured 2,500 units, multiplied by 6, it was 18,000, and this time with 3,500 units multiplied by 6, it comes to 21,000 rupees. The all 4 selling and distribution expenses transfer into outer column, which comes to 36,470, added into the cost of production, and it comes to 2,41,500 rupees. This is your total cost, or you can say the cost of sales. 2,41,500 units divided by 3,500 units manufactured, that is estimated for the manufacturing in year 2014, divided by this, which comes to 69 rupees. And this is your cost of sales or a total cost per unit. Now the main part is profitability. As they mentioned in the last part of the question, they need to charge 25% profit on sales. But as we already find out, the cost of sales, total cost, that means we don't have the amount of sales, and they asked to charge the profit on sales. That is why we actually put an equation. If they were charging a profit 25% on sales, how much percent profit can be charged on cost? Because of we have a cost price, but we don't have a sales price. So according to the proportion, if 25% profitability charge on sales, you can charge 33.33% or a 1/3 part of profit on cost, and that is why we divided by 3. So 2,41,500 multiplied by 33.33% or divided by 3, that is your profit, and the profit it comes to 80,500 rupees. Profit will be added into the cost price, as we already mentioned here, 1/3 not percentage, sorry, 1/3 part, or you can say 33 into 1/3% on cost, which comes to 80,500 added into a cost price. Your sales price would be 3,22,000 rupees, and 3,22,000 rupees your sales price for the unit in the 2014, that is 3,500. So again 3,500 will be divided to 3,22,000, it comes to 92 rupees per unit, and that is your sales price per unit, 92 rupees. Now if you want to confirm whatever the percentage has been given in the question on a sales price, whether it is right or wrong, you can make a cross tally also. How? They will actually tell you the mention 25% profit will be charged on selling price. What would be the now sales price? 3,22,000. So you can easily find out 25% on this 3,22,000, which comes to 80,500 only. So it means that whatever the calculation you made, that is perfectly okay. 25% would be charged on 322, or 1/3 would be charged on 241,500. Both the amounts are remain same. That means your calculation and your answer is absolutely okay. And in this way, you can identify the number of units is 3,500, their sales price per unit it comes to 92 rupees, and the total amount of sales is comes to 3,22,000. This is what the estimated cost sheet for the year 2014, and find out the solution of estimated cost sheet or a tender cost sheet for the year 2014. So now the variety of the questions has been taken for the explanation of the unit cost. One, the simple cost sheet, then the second cost sheet and how it would be prepared, the estimated cost sheet. We were prepared both the things, cost sheet as well as estimated cost sheet. And in the third question today, we find out only estimated cost sheet on the basis of revenue statements, on the basis of trading account and profit and loss account, and with the adjustments, how it would be reflect the adjustments on trading and profit and loss account, and preparation of the estimated cost sheet only. So all the three different varieties of questions we try to understand in this particular unit. This is what all about I want to tell you for the unit costing. Here the unit costing chapter is over today. Thank you. Namaskar.
स्वाध्यायः परमं तपः।
स्वाध्याय टीवी